Right, let's take you in now for the very latest in the world of business. Global markets are set to begin this week of trade still mixed. That's after a curb in investor sentiment over the latest U.S. Federal Reserve comments around further monetary policy tightening due to ongoing high inflation. Now, the JSE also closed weaker as a result of world market activity. Portfolio manager at Benguela Global Fund Managers, Grant Nader, speaks to us now. Very good morning to you. Thank you for your time. What's expected to dominate the first day of this new week of trade in local and global market performance?
Good morning. Good morning. Well, what we saw is following on from last week, we had the higher PPI data than expected out of the US. And subsequently, we've had some really challenging news out of the Chinese property sector in Country Garden, one of the largest developers, reporting some significant losses and raising fears of a default. This has really got markets on the back foot, particularly the energy and material sectors. And that seems to be the dominant news as we head into Wednesday, which is a Fed Minutes meeting. So not a meeting, a Fed Minutes review. So there's fears of talk around rate hikes, there's fears of slowing in China, and all of that is keeping markets under quite a lot of pressure at the moment.
Talk to us now about activity in emerging market currencies, including the rand.
So we're seeing a continuation of the strong dollar. Over the last month, the dollar has strengthened a good 2% against most currencies, and the rand is no exception. It's back above 19. It's down about 0.5% this morning. But it's not a rand story at the moment. It's a dollar story. As the prospects of higher rates for longer in the US persist, so we find that all the currencies are coming under a little more pressure. Whereas earlier on in the year, it was really about the rand's own problems.
Let's switch to some details around Absa. It's released results for the period ending in June. Perhaps give us some expansion there.
So actually not a bad set of numbers. They came out, they reported on the revenue line about 12.8% increase for the half year, which only translated into about 2.9% increase in headline earnings. So what's happened here is the benefit of the rising rates has driven their income on that line significantly, but it's been offset by the rising credit loss ratios as the consumers and the lenders come under further pressure. They've had to provision for that, so that's taken some of the benefit of that extra interest out of the equation. However, for the second half of the year, they do expect to see that credit loss ratio come down. So that's a positive. The other thing that stood out to me was they managed to control their costs very well. They kept costs at a level below the increase in revenue. So they're doing all the right things within a very tough environment. Africa traded very well. They reported a significant increase in revenue and profits pre-provision. Obviously, the provision, once again, for losses is what's taking the shine off some of the earnings. But they're coming out with a dividend that sits for the full year between 7.5% to 8% dividend yield. So a fairly solid set of numbers, I would say.
Lastly, Grant, how has Hollimane performed given their consolidated results?
So the results, I think, came off a very low base. They had a 7% reduction in revenue and then a significant 90% increase in headline earnings. So I would argue that this company's had a lot of challenges. They've got a lot of debt to deal with. They're in a challenging market, and they seem to be trying to reposition and focus on the right things, bringing capex under control. The share price has had a little bit of a rally recently, but to be honest, it's trading very cheap. Of these numbers, it's trading at around 2.5 times earnings, which really tells you that the market is not yet digesting a significantly positive prospects. They want to see management get on top of these problems and really refocus the business. So a good set of numbers. I think they're doing the right things, but the share is yet to react fully and price it in.
Very well. Thank you so much for that breakdown. Grant Nader, Portfolio Manager at Benguela Global Fund Managers, giving us the very latest in your markets and an update in the world of business.